Hello, and welcome back to Money Moves Daily, your Gulf Report. It's Thursday, September 4th. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, it feels like the markets are holding their breath today. Brent crude has been a bit volatile, hovering around that $67 to $69 mark, with everyone eyeing this weekend's big OPEC Plus meeting.
Precisely. Jason, that OPEC Plus decision is our big story today, as it could reshape global oil supply and prices. But we've also got a fascinating shift to discuss in the world of sovereign wealth funds, with one Gulf giant making some truly aggressive moves.
And speaking of aggressive moves, we'll dive into Dubai's red-hot real estate market and Saudi Arabia's incredible tourism boom. Plus, we've got quick hits on Qatar's ambitious LNG expansion and FedEx's latest Middle East play. So, let's get into it.
All right, Jason, let's start with oil. Brent crude has seen a decline of over 2% recently, settling below $68 a barrel due to growing speculation. The big question everyone's asking is whether OPEC Plus will consider yet another production increase for October when they meet this Sunday.
Wait, another increase, Sophia? I thought the narrative was about cutting production to support prices, especially with global demand still a bit uncertain. Why would they consider adding more barrels to the market now, especially as we head into what's often a softer demand season?
It's a strategic gamble, Jason. OPEC Plus has already agreed to raise output targets by about 2.2 million barrels per day from April to September. The UAE also saw a 300,000 BPD quota increase. Now, some reports suggest they might consider unwinding another layer of cuts, totaling roughly 1.65 million barrels per day, more than a year ahead of schedule. The underlying motivation, according to some analysts, is reclaiming market share, even if it means being comfortable with Brent crude in the 60 to 65 range.
So they're playing the long game, even if it means temporarily lower prices. For an international investor, this signals a shift from pure price defense to a more aggressive market share strategy. It certainly adds an extra layer of uncertainty, but also potential opportunity for energy-related investments if this move solidifies market positioning. Speaking of big shifts, we've seen a fascinating development among the region's sovereign wealth funds.
Indeed. For years, Saudi Arabia's Public Investment Fund, or PIF, has dominated headlines with its massive, transformative investments under Vision 2030. But in 2024, we saw a significant shift. Abu Dhabi's Mubadala investment company actually surpassed the PIF to become the world's top sovereign wealth fund investor.
That's a huge headline. Mubadala has always been a major player, but to outshine the PIF, especially with all the buzz around Saudi giga-projects, really says something. What kind of numbers are we talking about here, and what does this signal about their strategies?
The numbers are striking, Jason. Mubadala deployed an impressive $29.2 billion across 52 deals in 2024, a 67% surge from the previous year. In contrast, the PIF's investments fell by 37% to $19.9 billion. This really highlights Mubadala's aggressive global strategy, with 85% of its capital directed to developed markets, predominantly the U.S. The PIF, meanwhile, has doubled down on its domestic focus, with around 80% of its investments now dedicated to Saudi initiatives, aligning with its Vision 2030 goals.
So while PIF is building the future of Saudi Arabia brick by brick, or rather giga project by giga project, Mubadala is casting a wider net, securing global assets in sectors like AI, technology, and life sciences.
It shows two distinct yet equally powerful approaches to economic diversification within the Gulf. It's a testament to the region's evolving financial landscape.
Absolutely. And while these funds are making waves, let's look at some market trends closer to home.
Sophia, anyone who's been to Dubai lately, or even just seen the social media feeds, knows the real estate market is on fire. What's the latest data telling us? Are those sky-high prices sustainable? It's certainly a dynamic market, Jason. The Dubai residential market continues its upward trajectory. The residential market sales price index rose by 15.60% year-on-year, apartment prices increased by 15.22%, and villa prices soared by 17.81%. Transaction volumes are also robust, with over 94,000 residential sales recorded in the first half of 2025, a 23.04% increase year-on-year. Abu Dhabi is seeing similar trends, with property prices up 18.16% annually.
Wow. Even with global economic headwinds, Dubai just keeps pushing forward. It's truly a testament to its appeal as a global hub. And speaking of incredible growth, Saudi Arabia's tourism numbers are just as jaw-dropping.
They are, Jason. Saudi Arabia achieved a historic milestone in 2024, with international tourism revenue surging by 148% compared to 2019, making it the highest growth rate among G20 nations. The kingdom welcomed a staggering 116 million domestic and international tourists in 2024, already surpassing its Vision 2030 target of 100 million visitors, 7 years ahead of schedule.
That's truly remarkable. From an international perspective, it feels like the kingdom is genuinely opening up, moving beyond traditional pilgrimage tourism to offer a diverse range of experiences. It's not just about the numbers, it's about a massive cultural and economic transformation.
All right, let's speed through some quick hits from around the Gulf.
First up, Qatar's LNG ambitions. They're not just sitting back, are they?
Not at all. Qatar is significantly expanding its liquefied natural gas, or LNG, output. They aim to reach 142 million metric tons per year by 2030, a nearly 85% increase from current levels. The first phase of their Northfield East expansion is expected to begin exports by mid-2026. This positions Qatar to supply about 40% of the new global LNG supply within that timeframe.
That's a massive commitment to global energy security, especially given current geopolitical shifts. What else is making news?
In logistics, FedEx Express has opened its global head office in Riyadh. This move aims to further expand its Middle East operations, signaling growing confidence in Saudi Arabia as a regional logistics hub.
A strong vote of confidence for Saudi Arabia's position in global trade.
Now for our What to Watch segment. The spotlight is firmly on the OPEC Plus ministerial meeting this Sunday, September 7th.
This is the big one, Sophia. After oil prices have seen some declines, any decision on production targets will have immediate and significant repercussions across global markets. What are the potential scenarios and their implications?
Well, the market is currently digesting speculation of another output hike. If OPEC Plus does decide to increase production further for October, as some reports suggest, we could see continued pressure on Brent crude prices, potentially pushing them into that 60 to 65 range. This could benefit consumers, but challenge the economics for some higher-cost producers. Conversely, if they opt to maintain current levels, or even hint at future cuts, it could provide price support and potentially send crude prices higher, impacting inflation and energy stocks. The rhetoric around market share versus price stability will be key.
So, essentially, the direction of oil prices for the next quarter, and indeed the confidence in the global energy market, could very well hinge on this weekend's announcement. It's a critical moment for the Gulf's oil-dependent economies and global investors alike.
To recap, the Gulf is a whirlwind of activity. We're watching OPEC Plus closely for oil price direction, observing the fascinating strategic plays between sovereign wealth funds like Mubadala and PIF, and celebrating the booming real estate and tourism sectors across the UAE and Saudi Arabia.
It's clear the region is not just reacting to global events, but actively shaping the future of finance and industry. From energy to economic diversification, the money moves daily are truly significant.
Thank you for joining us on Money Moves Daily, the Gulf Report. I'm Sophia Reyes.
And I'm Jason Miller. Make sure to subscribe wherever you get your podcasts so you don't miss our next update on these crucial developments.